Welcome back to the channel. It's Mo from ATZ Finance. Today I'm going to be sat down with Qais from QK Accountants, an accountant, and we're going to be learning more about that dreaded word tax. We're going to be learning about offshore, whether it's moving to Dubai or somewhere else, and also some tax tips for you small business owners out there. So stay tuned in to listen to more, and don't forget to like and subscribe to the channel. Thank you.
So my name is Qais. I'm the founder of QK Accounts Limited. We've been established since 2019. We've got a whole range of clients, over 400 clients in all sorts of different industries. So yeah, that's basically a nutshell.
Interesting. So, as an accountant, you've got a whole different type of client base, right? All different industries. Why don't you name some of the industries that you work with?
Yeah. So we've got construction industry. We've got people who are mortgage advisors like yourself. We've got solicitors. So industry experts on that side. And then we've got, we've got painters, builders, architects, you name it. We've probably got it within our kind of accountancy practice. And the great thing about that is having that, then we're able to offer those services to any other clients who are looking for, if you're looking for an architect, if you're looking for a mortgage advisor, we've probably got them within our, kind of service packages anyway. We'll just refer our clients.
Oh, nice.
It's a win-win.
That's interesting. So you've got a pretty diverse client base.
Of course.
You don't just specialize in one thing, because I know some accountants do, right?
Yeah.
It just goes into one type of client, one type of industry. But okay, look, man, the elephant in the room is obviously, when you have to sit down with an accountant, there's only one word that's really going to come up, right?
Yeah.
And that word is the word tax, right? So similar to like myself working in the finance industry, the elephant in that room, I guess, is the word debt. So when clients are looking at their finance options, there's obviously that word debt that sits in the background. And I feel like a lot of clients have a negative aversion to that, right? There's always something that really holds them back when that word starts popping up. So what I'm really interested in hearing is more about tax, right? Everyone wants to always just pay the least amount of tax, but what is it like? Well, what's the reality behind that?
So the reality behind tax is essentially, look, you are contributing to society by paying tax. You paying zero tax, okay, it may benefit you for a year, 2 years. That's totally fine. But when it comes to needing a mortgage, for example, or trying to get a loan or trying to reinvest back into your business, the first thing they're going to look at is what are you earning? So if your tax is zero, 9 times out of 10, your salary is probably going to be a tax efficient salary of 12,570, £1,000 a month. That's not going to get you a lot trying to get a mortgage, which, a lot of our clients, they come with the intuition that, okay, in 6 months, a year, Cass, I'll be applying for a mortgage. We need to kind of prepare for that. So rather than trying to, like I was saying to you earlier, Mo, about you can't have the cake and eat it in regards to, you can't have a low salary, pay rock bottom tax, but then expect to get 500,000, 600,000, 700,000 pounds lending towards a house. It's not going to work. And nor can an accountant just change your salary a couple months before you're trying to get a mortgage. Again, it's not, it's not going to work in that sense.
Interesting. So there are some benefits to paying the fair amount of tax, right?
Of course.
Because you need to demonstrate that you earn that money, right?
Of course.
So yeah, it's going to work exactly how you said in the case of a mortgage or any other type of business loan. So you mentioned a bit there about, the social contribution elements of things, right? Do you feel that people feel like they're getting the most out of their tax these days?
This is something that's on social media everywhere, that people, like, maybe 3, 4, 5 years ago, people are actually happy to pay tax or the relevant amount of tax compared to what their income was. That's totally fine. But now I think people are very adverse against paying tax, just purely because they're not actually seeing that money recycled back into society through the NHS. Their bin collections have been, reduced to once a week now. NHS waiting times are through the roof. They can't even get an appointment. And, a lot of people may not be able to afford a private healthcare. So they are expecting the most out of the tax that they're paying to then come back in society and help them in other ways. When they're calling an ambulance, police services, all of these sorts of things. But because they're not seeing that benefit, they're even more adverse to paying tax. Because again, as you know, people are against paying tax anyway. So trying to then say to them, okay, well, pay tax, because inevitably you should pay taxes. That your law of the land is, if you are in this country and you're earning, you should be paying X amount, depending on if you're self-employed or employed, on your incomes.
Yeah, no, absolutely. I think you're right. It's hard to contribute towards society when you think that society is not really doing too great, right?
100%.
It just makes it even harder. So that's really interesting. Yeah, I mean, look, man, the word tax is obviously a really loaded word, right? So I'm sure when most of your clients come to you, they always want the rock bottom, right?
Of course, I think that's the kind of perspective that a lot of people have coming to an accountant, because the first, probably 9 times out of 10 when we jump on a call with a client, it's, I want to pay the least amount of tax possible, which
Right.
is, look, our job is to essentially save you tax. Like, nevertheless, we will do that, and we will ensure that you're paying less tax than, rather than you paying a lot more tax than you should do with another account, because they're not taking into consideration your expenses and stuff like that. So our team is fully fit and equipped to reduce reduce your income by looking for expenses within your business or your personal accounts. However, expecting zero tax when you earn 60, 70, 80,000 pounds, it just doesn't make sense. And essentially it goes into our next thing is HMRC red flags. Like, these are red flags to HMRC, paying the least amount of tax, paying consistently low tax, but your income is very high, filing late to HMRC, there's all triggers that HMRC have. And now with AI coming in, as you know, Mo, things are a lot more, it's not needing someone to be behind the screen to actually see those, those things happening, or those patterns. It's AI now. With AI coming in, with HMRC investing millions and millions of pounds within AI, it's the system that's flagging things. They can flag 200,000 people in a day from one trigger. And what that system will do, essentially, will just automatically send out a HMRC letter to you. They're saving loads of time on it and making loads of money, because they know you're kind of reducing your taxes in the wrong way.
Essentially, HMRC is now basically pushing back now, right?
100%.
Right, interesting.
And this year, more than ever, I think this year will be a really bad year for people who have been dodging tax.
Really?
Yeah.
Oh, wow.
So with MTD coming in, there will be a lot more filing. So that means with MTD making tax digital, instead of the yearly self-assessment, this will now mean you'll do 4 quarterly self-assessments and 1 annual, so 5. So not only will it mean you're probably going to end up paying more to HMRC, you're actually going to be paying more to an accountant to actually do that filing for you. So now, again, a lot of people are diverting towards limited companies.
Right. Is that a trend that you're seeing?
Yeah. A lot of people are, because they can't keep up with the paperwork. Funnily enough, people can't even keep up with the paperwork once a year. So imagine now telling them you've got to come to us every 3 months with all your paperwork in the right order, and then we can file for you. And then we've got to charge you 4 times.
Of course. Okay, so what are some tips that you can give some business owners out there when it comes to, okay, fine, maybe not reducing tax, but managing things correctly so that everything's in order, ready, and you can get the most efficient kind of tax rate?
So I think that one of the misconceptions, actually, Mo, is having to keep your receipts if your expense has gone through your business account.
Okay.
If it's gone through the business account, you actually don't need the receipts, or you don't need to give them to us as an accountant. It's good to keep them just for worst case if HMRC were to come. It's good to have all of these receipts. However, for an accountant, we don't, like, those days are gone where you need to come to us with files and files of receipts, because we can already see that bank transaction on your bank account when you send us the statements anyway.
Of course, yeah.
However, do keep any cash expenses, because there's no trail of that. So if you don't tell us that there's a cash expense with a receipt, we can't claim that. Again, it's, as an accountant, we need the relevant information to be able to claim the relevant pieces of expenses.
Interesting.
And then it leads on to the next thing, what is the expense? So an expense as a limited company or as a sole trader is, HMRC's 2 rulings are, the expense, for it to be accepted as an expense, it must be wholly and exclusively for the business.
Okay.
So that's number 1. And number 2 is duality of purpose. So you can't have an expense through the business where it's going to benefit you later. An example of that actually would be if you were to buy the lovely suit you got on today with that nice, beautiful Hermes tie. No?
Thank you.
If you were to buy that through the business, it may not be allowable, because there's nothing to say you're not going to be able to wear that to someone's wedding next week.
Yeah, if HMRC is watching, I don't wear this tie on my day off.
Exactly. So
it's wholly for the business,
exactly,
right?
Exactly. So, but on the flip side, in order to make that a business expense, you might have a suit with your branding on there.
Oh, yeah.
A to Z Finance on there. Again, there's stipulations to that. It must be stitched it can't just be like embossed or something. Again, because worst case scenario, HMRC would come, they would disallow that expense. So as long as it meets these 2 criterias, you're good to go. That is an expense.
Interesting.
But again, I think then going back to your question about cleaning up and how to do things right going forward, is ensuring that all business expenses are going through your business account. So for example, if you're a sole trader, you should not be mixing personal and business expenses, because one, it's very hard to determine. Of course, as an accountant, we'll be able to, but it will be a lot more difficult, but it's harder to determine what expenses were for what. and income. What income was for what?
Who would that be applicable to? Because I mean, sole trader is an interesting one, isn't it?
Yes.
Right. So give us some examples of typical industries that gravitate towards a sole trader model.
So it really depends. So usually sole traders are. It doesn't range. It ranges industry to industry. So you can be a plumber, you can be an electrician, but you've always had that mindset that limited company. It's big. It comes with the, limited company. Oh, that's a big thing. I can't be a limited company because I'm just a one-man band, which actually is the wrong way to look at it. I would always say, look, with MTD coming into place, definitely look down the limited company route. But also, if your plan is not to essentially grow the business or expand the business, maybe limited company may not be for you. But if you're earning consistently over the 50,000 mark, you're going to easily fall into that 40%. Whereas with limited company, there's a way to mitigate that. You can take a salary, pay dividends. Maybe if you've got your partner who's working as an admin, collating data, maybe paying invoices, again, have them on a salary through the limited company. Inevitably, it's going to reduce your taxes.
Interesting. Yeah. I mean, no, I definitely have seen the same on the finance side of things as well. We do get a lot of industries out there where the person is sole trader, and generally it's harder for lenders to, lend to sole traders. It's always the limited company model that probably works best for lending. So that's really interesting. So you mentioned a lot there, right, about efficiency with making tax digital coming into play and getting everything in order. What would you say the role of systems play in that?
Systems are very important. So there's systems out there like QuickBooks, Xero, which allow you to do your bookkeeping through the system, which is basically categorizing your expenses. And then on a monthly basis, it's always good as a sole trader or a limited company just to run your accounts for that month, because it's easy to see your Barclays account ping on your phone and a payment's come in or a payment's gone out. That's fine, but you need clarity. And the way to do that is through systems. So on a monthly basis, looking at what's gone in and out of the account, then say over a period of 6 months, and now you can see trends actually. Okay, maybe July last year revenue was low, but we still had high expenses. Then preparing for that, so you're budgeting and forecasting for the year to come, because that reporting isn't only this is how much I made, that's great. You're actually able to make business decisions off of that. So for example, how you guys will come into that mode, if your client is actually doing that and they know, well, in 6 months we are planning to buy a piece of equipment or machinery. Okay, we need to actually budget for that. So, okay, we're able to put money into business savings this month, and then kind of creating some sort of a cash flow to be able to determine, okay, by month 6, we'll have X amount saved within our savings, and this should then nicely fit in like a jigsaw puzzle as the deposit when we go over to A to Z Finance to get us a piece of equipment or some funding. So
yeah, absolutely. I mean, look, being proactive is one of the things that we highly recommend, to all of our clients and to any business owner out there, really, isn't it? The importance of just kind of looking forward into things, and I guess the use of systems heavily plays into that, right?
100%.
The other thing I wanted to ask you, right, is the role of a trusted advisor in the business, right? Us being two great examples, I'm sure, right? Many business owners, because we're also business owners as well, right? That's the funny thing. Although we're advisors in finance and accounting, we're also business owners. So as you know, as a business owner, there's so many things that you're doing, right? You're doing content, you're doing your marketing, you're actually out onboarding new clients, servicing your existing clients. Who does your taxes?
So we do our taxes. We do our taxes, but of course, look, with everything, when we speak to clients, we would advise them the same way we would advise our own company.
Exactly.
So we would go, and it goes back to the ethos of my business is making sure that every client gets the best customer service. That's very important. This is why the team works, day in, day out, 7 days a week. We've got, around the clock, we're working for our clients.
Really?
Yes.
7 days a week? I don't know. Oh, wow.
So we work 7 days a week just purely because one of the main issues that we see when clients come over to us from their previous accounts is the lack of responses from their from their accountants.
Right.
So we've always said, if that's the case and that's the reason these guys are losing clients, we can't lose clients due to that. We have to ensure that our systems are solid. So this is why we have systems in place. We have automations. We've got systems that ensure that nothing is missed, deadlines, etc. for our clients, just so that they don't have issues like they did with their previous account. So like, for example, a lot of issues that we have is previous accountants filing things late. So the client's getting penalties, and then they're getting they're saying to the client, actually, well, you need to pay that.
Wow.
Whereas our kind of ethos is, if we get a filing penalty because we filed late for you, we'll pay that.
Of course.
Like, it's our job to pay that because it's our fault. So
No, it's interesting. So how important do you think the role of a trusted advisor is? You know, what I say to everyone is you should have a good broker.
Of course.
There's always a set number of people any good business owner should have, right?
Of course.
Good solicitor, good accountant, good broker. So from your position, right, how do you provide that service to your clients, and how important is it to be that trusted advisor?
So we're in an industry where, similar to yourself, Mo, people are coming with problems. And they are looking for someone to actually solve those problems. And 9 times out of 10, you are the person that they are trusting with their whole life, their finances, you know, the things that have gone bad in their life. You know, you at point you're a shrink.
Yeah,
you know what I mean?
yeah,
You're trying to
I'm
fix
sure.
things and, you know, try to help them as best as possible. And, you know, again, going back to the element of customer service is essentially having such a broad network in different industries, we're able to help them with that. So as I was saying before, if a client was to come over with the intention, okay, I plan to buy in the next year or so, we'll actually make a plan with them.
Oh, right.
Yeah. So we said, okay, if that's the case, this is what your salary is now. Of course, look, inevitably for you to get lending, you are going to pay more tax, as you know, Mo.
Of course.
So we pre-plan that. So that means, okay, it's time to put your salary up then. You need to start contributing back because inevitably, if you try to leave it to the last minute, nothing will work. And this has happened in the past with our clients where we've had maybe a conversation, I plan to buy next year with no definite, yes, Cass, I'm definitely going to buy in March next year. And then it comes to the time and they're like, Cass, is everything ready? No, unfortunately it's not, because everything has to be solidified. There has to be an element of, we will help you as much as possible and we'll go above and beyond for you. But there has to be a level of, you need to take some consideration and take some on yourself. Like it's a 50-50 partnership.
Yeah.
You pay us for a service, we'll give you the best of that service, but we also have an expectation from our clients as well.
Of course, yeah, they need to follow the advice as well, right? Yeah. So what would you say to someone out there? You know, I get a lot of clients I speak to sometimes, they arrange their own lending.
Okay.
And sometimes they might even do their own tax, right?
Oh, wow, okay.
Yeah. So what would you say to someone out there that doesn't have that advisor?
So funnily enough, I was actually saying to a good friend just before this about how you wouldn't go at home and try to fix your toilet, or you wouldn't go and try to, you know, fix a coding error on your website.
Oh, yeah.
You wouldn't, you know, people go out and try to
Rewire
get
your kitchen, right?
Exactly, man. Exactly. So why would you then try to do your own taxes? Of course, look, there's an element of you're trying to save money. Okay, accountancy fees, it might cost you 250 quid to get your self-assessment done. That's totally fine. And I get some people genuinely cannot afford that, but 9 times out of 10, an accountant is probably going to have other ways to reduce your taxes. So where you would have saved £250 and then paid a £5,000 tax bill, you might have ended up paying a £3,000 tax bill with an accountant, but it would have cost you £250 on another. So inevitably you're saving. So I would say, look, always speak to an accountant, whether you don't proceed with their services or just go for maybe a consultation, whether that be an accountant, a solicitor, mortgage advisor, you know, finance company. Speak to them. Maybe they might charge you and you might not proceed with their service, but they might give you a gem that you might have incorporated and inevitably saved money along the way. But don't try to do everything yourself just to save money, because inevitably you trying to save that little amount, you're most likely going to lose out and pay more in the long term. Like That's why I know, Mo, sorry, just to cut you, about people go straight to the bank.
Yeah.
Right?
Yeah.
For mortgages. So they might go straight to the bank saying, well, you're just a middleman. Why not? I would just go rock up to Barclays. But the thing about that is they can only sell you what they've got to offer.
Absolutely, man.
Yeah?
Absolutely.
Whereas if they come to someone like yourself, Mo, you've got a panel of 250 different lenders. You're not only tailoring to what the price of the house is, what their deposit is, what their salary is. You're also able to say, I've got a really good connection in X lending society. We can actually get you a better deal, a better rate, better terms.
Absolutely, man.
And what's it going to cost the client? £500, £700, £1,000. But when they have to pay a £500 extra per month for 40 years, that's where it adds up. So yes, you might save in the short term, and that's the thing. A lot of people try to think short term, I will save this, but inevitably you're losing out long term.
Yeah, absolutely. No, I fully agree with you. And you know what? One of the statistics I like to bring up a lot is 3 out of 5 people, when they go to apply for a loan directly to the bank, they're applying for the wrong product. So that basically says it
Wow.
all, right?
Yeah, yeah, of course.
When you're running a business, yeah, fair enough. There's so many roles that you have to play.
Of course.
Accountant being one of them.
100%.
Maybe sometimes, I don't know, solicitor or
Yes, of
broker.
course,
But,
yeah, yeah.
you should always reach out to the professionals in these
course, of
industries, build the relationships that, are there and see how they can support you. Because as you said, right, the advice is sometimes a gem. The advice can be more valuable than any work that they do for you.
Hit the nail on the
So
head.
it's just good to have that in your network if you're in any business, right?
Yeah, for sure.
No, that's great. So look, moving on from this talk of tax, it brings me on to my next topic, right? Everyone these days is saying, "Oh, you should move to Dubai. You don't pay tax over there." So, talk to us a bit about that, right? I know you have some interest out there yourself, right?
course, yes.
In Dubai. What is it like? Who should be going to Dubai to save tax? Who shouldn't be going to Dubai to save tax?
Yeah.
What can you do to support them? And are there other options other than Dubai?
Okay, so I think this is on a rife, and I think social media is already doing that work for us and saying, well, everyone should move to Dubai. It's sunny, and the level of crime is next to nothing compared to, of course, look, they're comparing that to the UK, which hands down, okay, there's a big comparison to say, look,
There's
there's
a
a
lot
big
of crime
difference.
here, right?
Of course. However, it's not for everyone. And the reason I say that is because if, for example, Mo, you want to set up a company out there, but your actual aim is maybe not to move there, but it's only for the sake of tax, it's probably not going to be the right fit for you.
Really?
Because things like this can trigger issues with HMRC later on.
Really?
So for example, if you were to set up a company in the UAE, but fully manage it from the UK, HMRC would class that as foreign income. So
Wow.
they would tax you on this because essentially you are in their country making money, it's coming in. Yes, you're making it in the UAE, that's totally fine. However, you're essentially in a tax haven, taking money from a non-tax haven back into a tax haven, essentially. Therefore, HMRC want a piece of the pie. So that might not be the right fit. However, if you're someone where maybe a couple years down the line, you plan on moving, there is a level of you actually doing things out there. So maybe you want to move your marketing team to the UAE. You want to, get someone in the UAE. It might be less of a cost than it is in the UK. You might want to get someone out there, have an office space, and maybe build a separate business or intertwine it with your current business. Then that might be an option. But of course, look, the main reason I see day in, day out that people want to move over is because of the tax element, which is fine. I get that. Look, 9% corporation tax, no income tax.
Really? Oh, wow.
Big difference. 9% corporation tax kicks in the UAE once you've set up a company and your threshold reaches over 85,000. That's when the 9% kicks in.
Oh, wow, it's 85 and above.
Exactly, yeah. Whereas in the UK, as soon as you register a company, 90% corporation tax from the first day.
Wow.
VAT is 5% there, 20% here.
Oh, wow, yeah.
So there is that level of it, and the way that people see it is a better quality of life. Sunny 365 days of the year. You might get one day of rain and it's flooding and they haven't got the ecosystem to kind of fix that. That's fine. However, some people are thinking longevity. Okay, I plan to move with my family, maybe get a job out there. It might not just be people who are trying to set companies up out there. They're just moving to a country where inevitably, even if they get a job of £100,000, they're taking £100,000 home. Whereas here, £100,000, you're in the 40% tax bracket.
Wow. So you only get 60 of that.
Of course.
Wow. Interesting.
So there's not, I think people are under the perception that people are just going there to avoid tax. No, there's a lot of other things, the quality of life. Your children grow up somewhere where you're happy to let them outside. As you see in the crime rate in London, just in the UK is very, very bad.
Yeah. Things aren't looking that great here, are they? Yeah. Oh, that's really interesting. Yeah. So that, that dispels a lot of the myths where automatically just move to Dubai, save tax. There's obviously...
It's not as easy as that as well. Like, for example, Mo, even if you were to set up a company out there, there needs to be a level of, you've actually got employees there. It's, you've got an office space. You need to travel. Even like the Emirates ID, in order for you to be a resident of the UAE, you actually need to travel to the UAE twice a year. So that's on their end. So you can't just sit here and try to manage it and not go travel. There has to be level of, okay, there is something going on. You're going there for board meetings. Business is actually happening there rather than it's just a front for you to just, one of the myths is you can just set up a company there and invoice the UK company from the UAE and move money. No, it's not as
really?
easy as that. Yeah,
not as easy. Interesting. And you can help people with setting up companies
of course,
out there?
So it's not something that we're pushing too much at the moment. But again, we are helping our current clients. We've not kind of advertised it or pushed it out. But again, it is something that we are kind of moving into as well. Just because having someone like us to manage that, we're set up in the UAE, We're very learned with the UK law. We can ensure that there's no, you're not getting past that red line where actually HMRC is going to take that extra bit as well that's coming over from the UAE. So it has to be done in a level of, someone who's got knowledge, or a team that's got knowledge. Because a lot of people now, I think is very sad, is the UAE, all of these companies that set you up for 3-4 grand, they are only seeing it from the UAE side.
Okay.
They're not going to be able to help you when HMRC comes with a query.
Interesting.
So they're just doing it for commission, which is really sad. And I see it day in, day out. Whereas we work with professionals in the UAE who will set you up. They know exactly how the law works. But 9 times out of 10, they're playing on the fact that the UK is going down the pan. So they're saying, well, the UK is going down the pan. Come over here. We'll only charge you 4 grand to kind of set it up here. But they will be nowhere to be seen once they've got you over the line with the commission and taking payment. They're gone. So.
Wow, that's really interesting. So, yeah, so I see how you have benefits in both jurisdictions. You're obviously very well versed in the UK tax law. And thank you for giving us a sneak peek into your future plans out in Dubai as well. That's really interesting. So look, touched on it a little bit earlier, right? Where, you're a business owner yourself, right? Now, all tax and all, kind of accounting things aside, right? Talk to me a bit about what your entrepreneurial journey has been like. So, how did you get into your own business?
So it's been like, it's not just been, one day I woke up and we set out. So funnily enough, actually, so we started the business in 2019. I'm the sole founder. And I actually did it because I didn't like my job at the time.
Really?
So I was actually working currently I'm a financial accountant. So we're working with different businesses. However, I used to work as a management accountant within one business. So we used to just help them with their management accounts, payroll, these sorts of things, reporting, and helping the directors kind of expand and grow the business while reducing costs. So at the time, I didn't like my job. I just opened the company. I had no idea what I was doing, which was crazy as well. So we carried on from there. And then I didn't really push it for a couple of years. We got to around 2023 and, I said, I'm just going to put my full foot down. Bearing in mind, I was still working as a management accountant throughout.
So you did both at one point together?
So I managed both.
Wow.
Funnily enough, until mid last year.
Really?
So not a lot of people know this because
wow.
The level of service was that I didn't want people to say, it's slow replies. Or no. Everything was still as it should be.
So you took that kind of decision there to obviously support your clients better, right?
Of course.
Right. And I'm sure, it's something that a lot of people are going to be able to relate to out there, right? Hating your job, wanting to get into that entrepreneur life. But how did it feel? How was it an easy decision?
No, it's very scary. Look, for someone that's worked since I was around 15 years old to then rely on my own income, like with a 9 to 5, you're guaranteed to get paid at the end of the month. That paycheck's coming regardless of what happens up or down with that company. However, with your own business, I don't know how much I might make £200 tomorrow and nothing for the rest of the month. That's entrepreneurship.
Yes.
It's believing in yourself. And, again, another thing I'd love to touch on is the fact that entrepreneurship is not for everyone.
Oh, yeah, absolutely.
Everyone on social media is now, you should own a business. You should be a business. It's not for everyone. It's easy to say I'm a business owner and I'm an entrepreneur, but if you're not making no money, you're better off getting a 9 to 5.
Yeah.
And maybe coming and circling back. And but everyone just wants that title, entrepreneur, business owner, but it comes with a lot of stress. Every day I'm fighting fires in my business.
Yeah.
Today, it's something different to what it will be tomorrow.
Yeah.
And bearing in mind, it's like you have to always manage people's expectations as well. Like as the business grows, it means there will be more queries inevitably.
Yeah.
But we have to be prepared for that.
Absolutely.
So it's not just as easy as saying, I'll build a business and it will just start flying. Yes, of course, it's got its perks and, I can, the way that the business is set up, the team works from home, everyone is, kind of remote and I'm able to work from wherever I want, but it's because I built it to that point. Like there was a time it was just me. It was me on my kitchen desk trying to build this business, trying to win these clients and, coming with that extra edge, our USP, again, 7 days a week. We'll do everything in our power to reduce your tax as much as possible while staying above board with HMRC.
Do you know what? I'm so glad that you mentioned about the difficulties as well, right?
Of course.
Because it is a lifelong journey, isn't it? And sometimes you might have multiple businesses.
100%.
You start one, it doesn't work out. You have to pivot to something else. Because I think a lot of people think it's as easy as jump on company's house. No. Hey, what is it? The 15, 20 pounds?
Well, it's £50. It's actually increased to £100 from
really?
So that's another thing. HMR, company's house is killing us with these
From when?
fees.
Next month, yeah?
From next month. First
as you heard that, yeah? Start your businesses now.
Yeah. £100 is doubling, so yeah.
Wow, yeah. Now that's interesting. So, look, you've had a really interesting journey. You've taken it from, working with an accountancy practice. You took that plunge into your own. You bet on yourself, really,
Yeah,
essentially,
100%.
right?
Yeah,
Backed yourself,
exactly,
and
yeah.
here you are, you know. So just off the back of that, would you have any tips out there for anyone that's maybe thinking of getting into your industry and thinking of doing what you've done?
I'd say, look, nowadays people are a lot more open to speak to people. It's just because people are naturally happy to network. You know, Mo, we spoke over, Instagram, and
Yeah.
that's we've landed here today. So don't feel scared to ask people questions. Like even till now, like if I see an accountant or if I like the way someone's doing something, I'd love to jump on, and I do it. I jump on a call with them, even though I'm like 3-4 years deep in my own journey. It's always good to know how other people do things, and maybe, okay, you might take a gem from there, and something they might say might not work for your business, and that's okay. And then you go here and you take little pieces, and inevitably you look back and you've built a whole empire just from gems from different people. And that's the way I've kind of pivoted and got to where I am today, is listening to people and not always thinking that you know everything, because you don't.
That's a really
even
good
till
tip.
today, I'm still, I'm a journeyman. I'm still learning every single day, and it's not just people in my industry I learn from. I learn certain things from you, and you might learn certain things from me.
Absolutely, I know,
But
definitely.
it comes from expanding your network and being willing to go out of your comfort zone. Like just before we were saying, is you're not going to learn anything by staying in your hometown with the same people you grew up with, unfortunately. For you to actually grow your business or grow your empire, grow your brand, you need to speak to different people and get their perspective on things.
Guys, you know what? That's absolutely a valuable tip. That's really, really good to hear.
Yeah.
Now, thank you so much. So, look, thank you for your time.
No worries.
We've learned a lot about tax. We've learned about the offshore structures and learned a bit more about yourself and your own personal journey when it comes to business. So, yeah, just to finish it off, we'll do a little quick fire round.
Okay, cool.
So, if your accountant only talks to you once a year, that's a risk. Do you agree or disagree?
100%. You should be speaking to your accountant. They should be reaching out to you to see how business is going, seeing the growth. If you're speaking to them once a year, you've got a filing system. You've not got an accountant.
Okay, next question. Turnover is vanity, cash flow is sanity. Do you agree or disagree?
100% agree. It's easy to see 100K coming in the bank, but if you've got 2K left after that 100K and all your expenses, maybe there's something wrong within your business. So going through things, checking things, cash flows, pre-planning, again, goes back to your question, Mo. Pre-planning, making sure that you know everything going in and out of my business, because I do. Do you?
Absolutely. Great. Thank you. What common mistakes do you see businesses make when it comes to growing their company?
The main one that we see quite often is clients mixing personal business expenses. Like your personal expenses should not be going through the business accounts. 1, it's very messy. 2, it's probably going to be disallowed when the accountant comes to filing your accounts. And 3, there's no reason for it. If you're taking a salary, all personal expenses should go through your personal account.
Great. All right. Amazing. Thank you very much.
No worries.
And guys, look, make sure you subscribe to the channel, like the video, reach out to Cass on QK Accountants on Instagram, and obviously follow us on ATC Finance on Instagram. Great. Thank you. See you on the next one.